Hello everybody, let's talk about the Forex tops and flops and the long-term opportunities that can be derived from that. When we talk about higher time frame charts, we're actually talking about the big currency shifts that should last into the year 2035. Let's have a look at it. We have what remains very strong nowadays is actually the Swiss franc, and what remains very weak is the Australian dollar and the Japanese yen. That has not changed for a couple of years now, and we're basically riding the trends. What we currently see is that the dollar is a bit weaker, so it is a swing factor. It has basically switched with the euro. So the euro has become stronger and the dollar has become weaker. Well, all this the tops and flops list is based on chart patterns. Well, let's have a look at the charts now, and let's just start here with the euro dollar currency pair, because it's the most liquid currency pair in the forex market, and it has an impact on the whole market as such. Well, we had an interesting event, which was the election of Trump, right? And that actually triggered a sell signal on the euro dollar. The euro dollar broke outside of this multi-year sideways range. That was a very bullish signal. If it breaks down, it's bullish for the dollar. But with the announcement of the tariffs, that was in beginning of April, we actually saw the price overshoot the channel, and now we're located above this. So we're kind of a little bit in no man's land, and this is why we've drawn here both lines. We're actually at a pressure point here. Either we drop back into the range, and then we're actually looking to spike the par level, the euro dollar one with 4 zeros, and actually break below. A very big stop run move is lowering here, and that's why we've drawn here these arrows. Once price can actually break to the downside, and then the big number is a very important magnet, price is drawn to and then pushed through these levels, and a very important stop run level. Well, if it goes to the other side, if it can re-break this green line, it's a multi-year green line, as you can see, that would be a very bullish signal, and that would actually lead for the dollar to lose even more value. Well, let's have a look at a few other currency pairs with interesting patterns. Well, let's remain with the euro. This is the euro pound weekly monthly chart. We can nicely see we're looking at these special levels. This is the stop run level, and it's just getting tested here. We're just about to produce a stop run move. Currently it's testing the big number, but this is not it. We should actually see 1, 2, or 3 big green weekly bars coming out of breaking this important level. But it's not only this level. Let's have a look at one time frame higher. What we've been looking at is this wick high. Actually, overall, we're seeing an S1 bullish S1 pattern with a series of stop run levels. So we're actually looking for the euro to gain value against the British pound quite a bit. Why? We don't know why. We're just looking at the patterns, because the patterns tell the story. Let's just have a look at the euro versus a weak pair, which is the yen. What do we get? Well, we get a nicely trending chart, and we can see it. We can see it here as well. Here we're at an important level at the weekly chart, or we can better see it actually on the monthly. That's the stop run level. We're just about here to produce a stop run move into the target area. So there's a lot of bullish momentum here, and that allows you to trade lower time frame trades and have swing potential, because the weekly and the monthly chart carries everybody upwards. Let's see now a strong currency, a very strong, which is the Swissy against the euro. Well, both are strong, but as you can see, obviously the Swiss franc is much stronger. We're pushing here against this boundary, and that's basically, this is an S2 pattern that is about to trigger. That would be a very bearish signal. This is the important line. If this line falls, we should see a rush lower into Swiss strength. Why? We don't know. It could be all connected with the pound and the Swiss and the euro with the Ukraine war. So money is basically fleeing out of the eurozone and into the Swiss franc, which is a safe harbor currency, especially in Europe. So there's a lot of opportunity to trade the Swissy long, hence the euro Swiss chart short. Let's have a look at a few other pairs. Let's move now to the dollar pairs: Kiwi, New Zealand dollar, US dollar, Very interesting chart here on the weekly. We've got two really nice stop and levels. So price is approaching those levels. Currently, it's at the big number 156. And should this level fall, we should we should see quite a deep drop in price. It's not only this level, which is actually this level, we've got another level and another level. So it's basically a triple bottom. And overall, this is a downtrending chart. And we're actually looking for this level to be broken lower and ride the trend. We are shooting basically for this week low, which is the Corona spike fear low in March 2020. That's a pristine stop run level. And once those levels fall, are run over, well, it generates a lot of follow through, similar to something what we have seen here. Let's have a look now at the Swissy US dollar versus the Swissy. So the Swissy remains the strongest currency of all, and that's basically seen in the charts all over the place, right? It's not new. I mean, I'm calling out for the Swissy to get strong, and it's getting stronger since 2016, basically 10 years ago, when it has triggered a sell signal and another sell signal, another sell signal. The stop was never triggered. We get another pattern here and another pattern here. We have not yet broken the consolidation low of this pattern, and there's a lot more momentum to be seen here in this chart. Similar momentum of what we've seen here. This was just before the Swissy got pegged to the euro. Let's have a look at another. Let's have a look at another chart now. An interesting one, US versus the yen. So the yen is a very weak currency, and the US dollar yen currency pair is a very important one as well. You might remember that the Bank of Japan were intervening in the market, keeping the yen strong. They didn't want the yen to devaluate, so they were basically intervening here long, and that is very expensive for a central bank. And they basically have to sell dollars, their currency reserves in dollar, and they have to buy yen in order to make it more available. Well, that's very expensive, and it's not very long lived. I think we have just ended this period, and we are actually moving here right into the direction of more yen weakness. Nicely how the chart is clustered with stop on levels, and we should see another round of big bullish momentum, as we have seen back here. Actually, where did this bullish momentum come? Well, it didn't come from nowhere. There was a nice S1 pattern as well, this time here, back here, based on a very tight stop. Now let's have a look at a strong currency, the Swissy, against actually the weakest currency, right? The strongest and the weakest currencies. If you combine those, well, what do we get? No surprise, we get a big trend, an uptrend to Swiss strength and yen weakness. Again, when we have a strong trend, we always get a pattern, and this is an S1 pattern, and it's nicely unfolding here. We had another pattern down here on the monthly chart, and it's nicely unfolding into the target area of 200. So look now at pound versus Swiss. Again, the Swissy is the strongest currency of all. So this is in a downtrend, getting stronger for the Swissy. And that's a beautiful chart as well. It's clustered with stop and levels. I really love that. It's like hanging off a cliff and about to fall lower. Well, these are the opportunities you want to ride. And overall, it's in a downtrend. And as trend traders, well, we like to trade the trend and run over these important levels. The exposed wicks are stop run levels plus the big number, the par level. If you break this low, well, we might see a move similar to what we've seen before here in 2022, which is very profitable for trading lower time frames or to just swing trading higher time frames. Let's now have a look at and that might be more interesting for the Australian and guys and the traders who are living in New Zealand. The Alt New Zealand chart. Alt New Zealand chart is actually quite interesting. We can see how the Kiwi got really weak over the last couple of months. It has been very strong over here, then went into a sideways consolidation, which is typically a trend following consolidation. So we should see the kiwi getting stronger, but we actually see the opposite. Now we're at a pressure point. If we run over this stop run level, where we could see a big series of big bullish bars up, or this could establish itself as a double top, and we could actually break back into the range and then break outside of the range, which is clustered with stop run level. So it's a great chart to trade whatever the direction, and the market actually will tell in which direction it wants to go. Now let's have a look at the Euro New Zealand. So the euro, strong currency with a weak currency, what do we get? We get a very bullish chart, right? And now we had a very interesting point here in this chart construction. This is the pandemic spike high, a very big wick back from 2020, and we have tested it, and now we're testing it, and it's just about to produce a big leap upward, a stop run move that has not yet happened. Here's another stop run level, here's another stop run level. Beautiful, these two levels, how they're aligned, and they are just clustered with a very big number 2 with 4 zeros. Let's have a look at the last currency pair, which is a weak currency, the New Zealand versus the Swissy. Well, that's actually what happens when it's a nice example when a stop run level falls. This is the stop run level from back March 2020, coronavirus pandemic low, and it got broken here. It not always gets broken immediately, but once it gets broken, it produces a big move, and that's what we're seeing, a series of really bearish bars. Didn't come from nowhere either. Well, we had an S1 pattern here, an S1 pattern. Actually, the stop goes tighter based on a tight stop, just running its course. So there are a lot of opportunities out there. If you look at the higher time frames, it gives you a lot of input. Even when you trade lower time frames, be it the 15-minute chart, 5-minute, even the 1-minute chart, because it gives you tailwind.